Hey guys, thank you so much for watching this video. Please give us a call if you guys are looking to improve your credit score, lower your car payment, buy a car, trade in a car. If you're looking to purchase your first home, if you're looking to purchase a rental property, we can help you. Give us a call today, 877-205-7771. Talk to you guys soon, and thanks again. Hello everyone, this is Calvin Russell, CEO and founder of 850 Club Credit Consultation. Today we're going to talk about the top 5 things that get you denied for a home loan. And the reason why I know this list, well, because I've been seeing it now that I have my real estate license. So, but I think it's great for people to have access to knowing, what type of things will actually keep you from getting a home, because these are a lot of just basic things that a lot of people may not necessarily know about, but of course it's keeping people from achieving their goal of home ownership. So let's jump straight into it. Number 1, I think this is the sneakiest thing ever, and a lot of people don't talk about it. Just this topic alone, I can do an hour presentation on why it's so important. But again, you won't hear a lot of people talking about this, especially on YouTube or Google, because a lot of times people don't make it to home ownership, and if they do, they think it's just their situation. But again, I've seen it happen a couple different times, and I'm telling you, you most definitely want to look out for this, and that's default student loans. Okay, so now let's talk about this very quickly. Whether you get student loans removed or not from your credit report, and yes, at 850 we've gotten them removed before for some of our clients, it's not about relying on that. A lot of people have no interest in on getting their student loans even talked about, removing them, right? Until they're talking about getting a home. But here's what a lot of people don't understand. Student loans are government owned, and so as does, I would say, about 70% of home buyers go through what they call FHA. That's the Federal Housing Authority or Association, whatever, either one of those. Long story short, those are both government-owned products, okay? Student loans and, of course, FHA. So when you are going through the process and they're trying to get you an FHA, what they call account number or PIN number is one of those two, and pretty much how it works is when a person is after the appraisal process or around the appraisal process, they assign that consumer, the person that's about to buy the home, they assign them what they call an account number. When they try to assign them an account number, the government essentially looks at their profile. And sure enough, they can see that the student loans are there. So this has nothing to do with your credit report. So I say that to say, whether your student loans are on your credit report or not on your credit report, you cannot be in default, okay? That's the biggest thing. So make sure your student loans are out of default status before you try to apply for a home. Otherwise, you're going to be denied. And here's the worst part about being denied for default student loans. They can't see that you're defaulted until after you pay for an inspection. So let me just give you guys a quick rundown on when you even get to that part. So first, you're looking for homes. Then you finally, find one that you like. You go back and forth on numbers. You give your earnest money, which is normally $1,000 or like 1% of the purchase price, depending on your state or whatever whatever you want to do with the seller, right? But most commonly it's $1,000. Then you have, now that goes to closing later down the line, okay? Then you have the appraisal process, okay? But before the appraisal process, you have the inspection. So when you have the inspection, that's money you don't get back. And so whether that's, I don't know, $300, $400, whatever, then you have the appraisal. That can range anywhere between $400, $500, or $600 for an appraisal. So right around that time frame, mind you, again, you get the earnest money back, okay, because financing obviously fell through, but the inspection and the appraisal, you do not get that money back. That can be anywhere between, $1,000, let's say $800 to $1,000. You don't get that back. That's an expensive mistake if you have your student loans in default and you want to have, home. Well, of course, home. Then I strongly recommend, that you try to find out if you're in default status, figure out a way to get out of default status, okay? So that's number 1. Number 2, temporary jobs, all right? You gotta stay away from these companies that have you still at a temp job. I have a client right now who meets all the criteria for home ownership. Her credit's there, the income's there. The unfortunate thing about it is her temporary job is paying her like a full-time employee, and they've been had her on temporary for over a year now. Okay, so it's crazy how that is, and she's still on temporary, status, but they're paying her good money. But again, with a temporary job, you cannot get a mortgage, especially not an FHA loan. Now, whether if you can sneak by and get a conventional, I don't know. Every lender is different, especially if they're trying to do the same practices they were doing before 2008, which led to 2008, by the way. But again, they got a temporary job. Stay away from that 1,000%. Number 3, using Cash App, Zelle, Chase Quick Pay, using all those platforms too much. Now, I get it. A lot of people got a small-time business hustle. A lot of people are even full-time, taking a lot of that money, right? I know my barber, he uses, one of those platforms and making a lot of good money. The problem is when you have all of that, and there's nothing wrong with getting, a few deposits here and there. But when I would say at least over 40% of your income that you're counting is coming from Cash App, Zelle, Chase Quick Pay, all these other platforms that are out there where it's direct, a direct cash transfer. They can't really track what that's for. So it's almost like someone's just putting cash in your account, which again, that's fine, but you know how the government is. They want to be able to track everything, especially when they're talking about giving you a 15 to 30-year commitment on a mortgage. So how do you dodge that? Number 1 is that if it's your business, then you must file taxes on it, okay? Ironically, that's not one of the top reasons, because I think that's kind of pretty obvious. You got to file taxes in order to buy a home, but a lot of people don't know that. Here's the disconnect. What it is that if the tax returns don't match all the cash deposits, then it's just going to be a huge different type of situation. So of course you got to file those taxes. Whatever it is, because I'm noticing if you're a barber or any type of cash business where that's one of the ways that you collect money, you got to file that on your taxes. If you don't, you're going to have to keep explaining and keep going through that entire process. Now, if you have a W-2 and you get a lot of those cash deposits, that is not a big deal. Again, we're only talking about if you're counting that money, but that's what they say, cash kills deals. You can't keep doing that and not reporting it to, reporting that to the IRS when you're doing your taxes if you're looking to buy a home. Or what they do is they just take that income off of it, and then they just say, hey, you know what, this is, gifts from my, from my brother, my sister. Don't worry. When you talk to the mortgage lender, they'll show you how to get around that whole situation, especially if you don't have to use that for income purposes when qualifying for a home. Number 4, applying way too much for a mortgage. First off, mortgage companies hate to see that you just applied for a mortgage with someone else, because the flag's going to raise, why are they working with us? That must have been some type of fraudulent activity, or of course, a lot of times it's the interest rate, but a lot of times people don't know that they can go from different mortgage lender to mortgage lender, to look at different rates and things of that sort. They feel that if you let them run your credit, you should have already known that prior to. Most people change lenders because they got denied, and there's always a reason why you got denied. It's not like getting denied for an auto loan. If you get denied for an auto loan, you can easily go next door, nobody asks any questions. But no, they know how the mortgage industry is. That means that they must have gotten your documents, something didn't match up. They always assume the worst. So when they see that, that's not so much increase, it's more so the particular type of inquiry, and that's trying to see that you've gotten a lot of different mortgage lenders. And when I say a lot, I'm talking 1 or 2. If you go to one mortgage lender, you better believe if you go to another one, they're going to ask questions on what happened with the last one. If you've went through 2 of them and you're going to a 3rd one, they're probably not even going to take your application, especially when they see it. When they see that, and don't get me wrong, there's always ways around certain things. That doesn't mean you're going to get denied, but that's going to make the question a lot more questions on what happened here, was it something that they did wrong, was it something that you couldn't show proof of, and that's what's going to lead into number 5. Okay, I would say the number 5 reason that a lot of people get denied for a home loan, the stuff that they put on the application does not match their documentation. For example, a lot of times people will say things like, well, I work 40 hours a week. I have a deal like that going on right now, and where she says she worked 40 hours a week. Now, she does work 40 hours a week, but because of her break time, of course, what's on the check stub, like 37 and a half. If you take a 30-minute lunch, 5 days a week, that's 30 times, well, of course, half an hour times, 5, that's 2.5 hours. You do the math on that, it comes out to 37 and a half. So when you got 37 and a half hours and you told them 40, then they're gonna wait. They need proof that they need 40 hours on your check. So you either got to do overtime, or you're not taking lunches, or you got to figure it out, or just simply say, hey, I don't get 40 hours, I get 37 and a half. So everything you say must be on the application. Of course, that does not, again, these are not things that are going to immediately get you denied, but if you cannot show documentation, then things start to add up, then flags start to pop up, and underwriters not going to let you, they're not going to take your file, and that's what underwriters' job is, to make sure that they have a solid and consensus buyer. It has to make sense, okay, guys? So, of course, if you like this video, like it. If you know anyone looking for a home or going through that process, or just have a goal in general to have home ownership done one day, be sure to share with them this video. And as always, be sure to subscribe, as we have a lot more great content on the way. Thank you guys so much. Have a great day.